Hey everyone. So, something pretty huge just happened in the crypto world that surprisingly isn't getting as much noise as you'd expect. On February 18th, 2026, we officially got the first ever spot SUI ETFs in the US. But here's the kicker, these aren't regular ETFs that track the price, they actually include staking rewards. Now, this is a massive first for the US market. We're talking about Canary Capital and Grayscale dropping two big products. The Canary Staked SUI ETF, which trades under the ticker SUIS on the Nasdaq, and the Grayscale SUI Staking ETF trading as GSUI on the NYSE Arca. If you're wondering why this is a big deal, think of it this way. Usually, if you want to earn rewards on your crypto, you have to move your coins into a private wallet. You pick a validator and manage the whole thing yourself. It's a bit of a headache for the average person, but with these new ETFs, the fund does all that staking work for you. The rewards get added directly into the fund's value or NAV. So you're basically earning passive income on your SUI tokens right inside your regular brokerage account, like Robinhood or Fidelity. It's super clean and regulated, which is exactly what big institutional investors have been waiting for. Now, let's talk about the two main players here. First up is the Canary's SUIS. This one is pretty cool because it's a fully registered fund under the 1940 Act, which is basically the gold standard for investor protection. Then you have the Grayscale's GSUI. Grayscale actually took their existing SUI trust and converted it into this ETF to make it easier for everyone to trade. They're even being super aggressive with their fees. They're charging 0.35%, but they're waiving it entirely for the first 3 months or until they hit $1 billion in assets. They clearly want to be the top dog in this space. So how's the market actually reacting? To be honest, it's been a bit of a meh start. The launch happened right in the middle of a broader market slump. On the first day, the trading volume was under $150,000, which is tiny compared to the tens of millions of dollars we saw when Solana or XRP launched their products recently. SUI's price actually took a bit of a hit too, dropping below $1 to around $0.91 to $0.98. It seems like the sell the news crowd was out in full force, and macro pressures like the Fed and the strong dollar aren't helping. But don't let the slow start fool you. The long-term picture for SUI is actually looking really solid. It's becoming a powerhouse for things like Web3 gaming and DeFi. Plus, having these ETFs means more SUI tokens are being locked up for staking, which could eventually lead to a supply shock once the market turns bullish again. Now, speaking of yields, let's get into the numbers. Right now, SUI staking rewards are averaging between 1.7% and 3.3% annually. Some people are hyping up potential yields of up to 7%, but if you're looking at the actual on-chain data for February 2026, most stakers are seeing closer to that 1.74% mark. It might not sound like a lot compared to some crazy degen protocols, but remember, this is yield you're getting on a high performance layer 1 asset within a regulated ETF. It's like a dual return. You're getting the exposure to SUI's price and the network's rewards on top of it. However, there's a bit of a cliff that we need to watch out for. On March 1, 2026, about 43.35 million SUI tokens are scheduled to be unlocked. That's roughly 1.13% of the total circulating supply hitting the market all at once. Historically, these unlocks can cause a bit of a short-term volatility as early investors or contributors might decide to take some profits. With the price already hovering in the 90 cents range and the ETFs having a quiet start, that March unlock is definitely a stress test for the network. The big question is whether the new institutional demand from these ETFs can soak up that extra supply. Analysts are looking at this as a bridge between traditional finance and the new global economy that SUI is trying to build. Even with the unlocks and the bearish vibes, the plumbing is being laid for some serious growth down the road. If the network can hold its ground through March, we could be looking at a much stronger base for the rest of the year. So here's the bottom line. If you're a fan of the Sui ecosystem, or you're just someone who's looking for a regulated way to get yield on your crypto without the, technical hassle, these ETFs are definitely something to keep on your radar. And it's a bit rocky right now, of course, but this is a major step toward making crypto yields accessible to everyone. So that's my take on it. Let me know what you guys think about this in the comment section. If you enjoyed this video, make sure that you like it and subscribe to the channel so you can watch my rest of the videos when I upload them. But yeah, this is all of you guys in this video, and I'll see you guys in the next one shortly. So stay tuned.